Business of Property podcast. I'm Simon, and I've been investing in property for over 20 years. And if you're an active landlord or planning your next property investment, this podcast is for you. I hope you enjoy this episode, and I would really appreciate it if you could tell a couple of other property people about the Business of Property podcast. Since the budget a little while ago now, I've been fortunate enough to have a few conversations with landlords and property people about making tax digital. And I thought that some of the questions and some of the answers, obviously, might be useful for others to hear as well. So that's what I'm going to cover this week. And I'm going to try and cover everything right from the beginning and explain what's involved, who it's going to affect, the processes of the change towards making tax digital, and also dispel some common concerns that seem to have cropped up. So hopefully we'll be able to do all of that fairly quickly in this episode. If you have any making tax digital questions that I don't manage to cover in this episode, please do email me. You can reach me on show@thebusinessofproperty.com. I would really like to know what else you are unsure about or would feel important within the making tax digital sort of change and process. And I'd be very happy to answer any and all questions on a future episode. So please do send me those by email, or there's also a contact form on the website, which you can find linked in the show notes. I really am curious to know what it is that people are unsure about and still wanting to know. So firstly, I'm going to start with a quick recap on who, in the property world at least, is affected by making tax digital. Now, it does also affect those with self-employment, sort of sole traderships. A lot of what I'm going to say today is sort of applies to them as well, but there are some slightly different aspects. So I'm not going to cover those specifically. I am going to just focus on the property side of things. After all, this is the Business of Property podcast. So hopefully that's going to be okay for everyone. But if you do have questions on the wider making tax digital, please do feel free to email those in, and I will answer them where I can. So first of all, this is making tax digital for income tax and self-assessment. I think HMRC are going to sort of slightly rebrand that, but it's important to say there is also making tax digital for VAT, for example, which is completely separate. And going forward into the future, at some point, there will be other making tax digitals for sort of corporations and things like that. And again, what I'm talking about today is not those things. It's just making tax digital for income tax and self-assessment. And for landlords, this means it affects you if you have property in your own name and you declare that property income on a UK HMRC tax return every year. And there's a specific property page or a set of property pages within that tax return. If you fill those in, then this is what I'm talking about. So the first set of people that are going to be affected are people who have income of over £50,000 per year. And this is property income, so primarily rent. It could be a couple of other things as well, but primarily this means rent. This is before taking off any expenses. This is not talking about profit or anything like that. This is just raw income. So the raw rent receipts across your entire property portfolio. If it is over £50,000 per year, then making tax digital will affect you from April 2026. The next set of people is a slightly lower limit. So now, same criteria, income, total rents across your portfolio. If that is over £30,000, then you get an extra year, and making tax digital will affect you from April 2027. And then the final sort of grouping that was only introduced in the recent budget, and that is people with property income over £20,000. Now, we don't have an exact date for this group, but you have presumably a little bit longer, and the government have said that it will come in, making tax digital will come into effect you before the end of the current parliament. So that's 2029 at the latest. So now you know when you'll be affected, assuming you're in that group of £20,000 or more of property income. I think I'm going to start with covering a couple of easy questions. Well, hopefully easier at least. So, first up, does making tax digital change when I pay tax? Will I have to pay tax quarterly? So the short answer is no. Currently, there is nothing in making tax digital that will change when tax payments are actually due. They will stay as they currently are. You have to pay annually, although effectively 6 monthly, because after your first one, you then pay tax on account every 6 months. And of course, we can't tell what's going to happen in the future, and this might change. And I think apart from the sort of minor effort involved, it might actually be quite nice to pay tax not so much earlier or more frequently as such, but more accurately. Because currently, I could have a really good year in property and then follow that up with a year where there's lots of repairs and lots of expenses, and I should be paying less tax. But the payment on account doesn't work like that because it's based on the previous year. And in actual fact, you might end up paying too much for a while because it's based on your previous year's profit. Whereas if you're declaring your tax quarterly, then HMRC could actually take that into account in the future and reduce your tax bill much faster. So a lot of people, I think, are very concerned about this question, but there could be benefits for landlords as well. So I don't think it's necessarily all bad. But currently, no change. Payments on tax will be staying exactly as they are currently. The next question. Will I have to report capital gains tax from property sales via making tax digital? Well, in most cases, capital gains tax from property must be reported and paid within 60 days now. And you do this via the Report and Pay Capital Gains Tax on UK Property service, which you can find on the HMRC website. And making tax digital doesn't change this. So again, no change, just the same as normal. Now, the big question, and the answer to this is going to probably take most of the rest of this episode, and that is, how will the transition to using the making tax digital process work? And I think to sort of try and explain this, I'm going to run through an example. So let's imagine you have over £50,000 of property income. So you're in the first set of people who are affected by this. And you're going to need to be doing making tax digital from April 2026. So in the lead up to this, you will have submitted your 2024 to 2025 tax return as normal. So you might have done that early, but a lot of people will have done that in January 2026. So quite a while after the end of that tax year. And that will have all happened as normal, as it currently does. Submitted your tax return probably online via the website, paid your tax before the end of January, all as expected. And now you're in the current tax year, which is 2025 to 2026. And of course, that will finish in early April, as tax years always do. And you might want to get in early, but you, again, don't have to. That tax year doesn't actually need to have its return made until January 2027, as completely normal, as currently the case. And that can be sort of delayed if you want, or you could do it earlier. But it is the normal process. There's nothing changed in that tax year and the processes that you have to complete after it. However, before you hit the deadline for that tax year, you will need to have found some making tax digital software, and you'll need to be keeping digital records for your property business. And those processes, those digital records and the software to support them, will need to be in place from basically the beginning of April 2026. So as soon as that previous tax year ends, you need to be in place and ready to go with Making Tax Digital for the next tax year. Your first quarterly return will need to be submitted in July. So that's for the quarter, April, May, and June. Strictly speaking, the deadline for that is actually early August. So you've got a few days in August as well, but you should really be aiming, I think, to have that done in July, especially seeing as that process is going to be really, really easy. In PATMA, the Making Tax Digital quarterly submissions are very straightforward. It's an email reminder. You log in, you check the figures, which hopefully you've been maintaining every month, probably from open banking or something similar, and you just click a couple of buttons to submit the figures and send them to HMRC. So it's a very, very quick and easy quarterly process. So you may as well get it done as early as you can and get that finished. So within this process, a sort of sub-question which has come up, which is, what information do you actually need to send to HMRC? That quarterly submission in return, what's in it? Well, it's just the same totals that you normally put on your property page in your tax return. So sort of a linked question to this that I came across when talking to people is, do I need to supply lots of extra data and lots of extra information? Do HMRC want to see all of my expense invoices? And do HMRC want to see all the receipts and things like that? No, they don't. It's just the same information as you currently put on your tax return. It's half a dozen numbers. It's a bit more than that, actually, but it's just those totals. So the total income and the total expenses in the various categories. And that is it, just those totals that get sent. Obviously, your Making Tax Digital software that you're using, that has to keep digital records. That has to keep the breakdown of all those numbers in a digital form that you can, if you need to, go back and reference. But HMRC don't want that breakdown. And indeed, Making Tax Digital does not support them being sent that information at all. The only thing that Making Tax Digital software can send to HMRC is the totals. And that is all that they want. So then you will go through the tax year and you will repeat this process every quarter. So that's fairly straightforward. It's just the same process each time, just with new figures. And then after April 2027, so you've reached the end of that tax year, you'll then need to fill in all the rest of your tax return information and submit that to HMRC as normal. Now, I say as normal, but this brings on to the sort of next question that I came across, and that's, how will I submit the rest of my tax return? And the answer to this may vary a little bit, but in the simplest form, the non-Making Tax Digital parts of your tax return will still be submitted via the HMRC website. The software will look a little bit different. They are redoing it so that the entry process and things is different. And of course, the information for your property business that you've submitted via Making Tax Digital will be pre-completed for you. It'll already be in your tax return. So that part you won't need to enter anymore. It's just the other things. So I know your bank interest or your charitable giving or whatever it might be that is other elements of your normal tax return. So last couple of questions. When do I need to start keeping digital records? Well, your deadline for when you must be keeping digital records from varies depending on which cohort you're in, whether it's April 2026, April 2027, or the as yet unnamed slightly later date. However, I would really very strongly recommend that you start keeping digital records as early as possible, at least a few months before your sort of deadline kicks in. And this is because you will need to find some software to help you support that process. And there may be some teething troubles while you start using it, while you onboard your existing data, while you get things generally set up and used to the process. And you don't want to have a problem where you're missing chunks of data that HMRC actually need and want you to be relying on. So if the earlier you can start that, the better it will be. And of course, one of the benefits of swapping to digital record keeping and using sort of streamlined software to help you manage that is that it will be a much faster, much easier, much simpler process for you. If you're coming from paper records, for example, you have all sorts of benefits open to you in the way of automated reminders and automated sort of streamlined processes and double checks between invoices you submit and banking records and lots of wonderful benefits there. So the earlier you can start using that and start enjoying those benefits, obviously, the better it will be for you as well. Last question then is, should I join the public beta in 2025? So even earlier than the 2026 deadline, there is a beta running from 2025, April 2025. And I think I would sort of extend this question to also say, should I join Making Text Digital voluntarily before I actually need to? And I think this really is up to you. I think joining the public beta in 2025 will be great for lots of people. The main benefit to doing that is that you will get a lot of support from the software you choose, from PATMA, from me, if that's what you choose to do, but also from HMRC. They are being very positive about helping individuals where it's needed through this process. So the earlier you can join, the more support you will have in that process. Of course, there might still be some teething troubles, so there could be minor issues along the way as well, but you will be well supported through those if there are any. If you join later, then hopefully the minor niggles will all be sorted out, so the process and the experience will be smoother. But I would probably recommend joining earlier than you need to, if you can, and certainly voluntarily if you feel suitably digitally enabled, shall I say. So if you're worried about it, then maybe don't yet. Make sure you're there with the digital records. Make sure you start doing that. Make sure you start using software to support you. But you may want to wait on the HMRC and actual Making Text Digital part of it for a little bit. But if you're feeling more digitally comfortable, then why not? Why not get this process underway and rolling a little bit earlier, get used to it before it's actually required of you, and reap the benefits of being able to have that slightly more streamlined tax return process. Because those numbers at the moment, you have to collect them together, retype them into HMRC systems and things. Whereas with Making Text Digital, it's just a few clicks and all the data is there in your tax return, ready for you to use. So that's it with my set of questions from people I've been talking to recently about Making Text Digital. If there is something that's a burning question for you on Making Text Digital that I haven't covered here, or that you didn't understand my answer to, or that you'd like more depth on, please do get in touch. You can email me on show@thebusinessofproperty.com, and I'll be very happy to help answer any more questions in a future episode. So please do get in touch. But for this week, that's all from me, and I will speak to you again next time.